Its benefits, but you got to know how to be smart with your investments. Here to talk to us more about this, how to get a leg up on the stock market, is Brent Wilsey from Wilsey Asset Management. Brent, great to see you.
Good to be here.
Okay, so we're talking about people who are, maybe they have an online account and they're sitting in front of their computers and they're trying to stay ahead of the market and make some money off of it, but that's a tall order.
It's a tall order. And Jason, a lot of smart people can't beat the market. And we're talking doctors, lawyers, engineers. These are smart people, but there's so much data out there. You don't know what to read and get overwhelmed with all the different type of data. And one of the big things that people miss on is patience. And the problem is, you be patient with the wrong thing, you're going to have a problem. But is patience like, oh, this isn't working. It's been 6 months and not working. I'm going to try something else. So they're constantly changing things. And I do have to blame a lot of these online companies, because I always tell people, they get paid when you trade. So they want you to do a lot of trading, and that's not the way to be successful investing.
Well, sometimes, I mean, I've been that guy before a while back.
It was fun for a while, wasn't it?
Yeah, it's fun for a while, but then you're like, you know what am I really, honestly, I don't know what I'm doing. I really don't. I'm looking at, I'm trying to get news about a company maybe, invest in something that I feel strongly about, but then you risk emotional involvement, and that can really send everything out the window.
And it's a lack of the right data, because what you should be doing, which we do at our firm, is fundamental analysis, which works very well. And it's kind of funny because we all know Warren Buffett. And Warren Buffett, since 1988, he would have been fired. And again, I'd love to have him as my personal financial advisor. He'd probably been fired because since 1988, on a yearly basis, he only beat the S&P 500 like 60% of the time. If you look at a 5-year time frame, it's about 70% of the time. And even if you go out 10 years, he only beat it 85% of the time. Well, why is this guy so great? Well, since 1988, he has outperformed the S&P 500 over that time frame by 350% by doing the right thing and being very patient. And that's the hard part, is being patient with all this data coming in.
He's patient and he doesn't get emotionally involved. One of my favorite quotes from Warren Buffett is when he said, "I've made $1 billion in a day and I've lost $1 billion in a day, and either way I'm having a hamburger and a Coke for lunch."
That's right.
That's how he looks at it.
That's how he looks at it. He doesn't get all emotional about it and so forth. And the things we get bombarded with, you see these things where, oh, we had a test of the market, had a monkey throwing darts, you know, in a 6-month period, he beat the manager. Well, of course, that's just a crapshoot game there. But you've got to look at the long-term side here. And the big key to investing is, again, it comes back to being patient here.
What would you say is the most important things that get overlooked for somebody who's trying to, say, trade online? I mean, you're talking about all the data. There's a lot. What do people not realize that they really need to look at?
We got to remember, you're buying companies here. You know, they might be coming out with a new drug or something else, some new product. That is not always a reason to buy a company, because they've got to have low debt, they've got to have earnings, got to have cash flow. Because I always joke that the person who invented the washing machine, wow, what a great thing, that company went broke because they didn't have enough capacity, enough cash flow to keep going. So you've got to understand it's a business that you're buying. And the other thing that people do make a big mistake, well, I'll just buy the top performing mutual fund because they've done the best. That doesn't work either, because when you start doing that, they get more money coming in. What do they have to do? They have to buy these stocks at a higher price. Their next 10-year performance is lower. So the best thing to do is actually buy the individual companies or have a manager that does that and is patient with those.
And that leads us to the seminars that you offer.
Yeah, and at these seminars, which will be, the next one will be Wednesday, March 27th at 6:30. And at these seminars, we'll actually show you how to beat the market long term, not year to year, not over 5 years, but how you should be doing it, because we talk about being patient, having a concentrated portfolio, and doing all the fundamental analysis to buy those companies. And kind of setting up how you beat the index is by creating your own index and being patient with it and knowing that it will work because of the fundamentals.
All right, Brent Wilsey, Wilsey Asset Management. Great to see you.
You too.
Smart Investing 2000.
Oh, yeah. You remember that. I did not. Thank you.
Yes, I do. All right, we'll be right back. But first, we're going to leave you with the music of the Back Pocket Whiskey Fellas. These guys are awesome. Take it away, guys.